Internal Revenue Service IRS tax news. Special $300 tax deduction helps most people give to charity this year, even if they don't itemize. IR 2020-264, November 25th, 2020. Washington. The Internal Revenue Service today reminded taxpayers of a special new provision that will allow more people to easily deduct up to $300 in donations to qualifying charities this year. Following special tax law changes made earlier this year, cash donations of up to $300 made before December 31st, 2020 are now deductible when people file their taxes in 2021. Quote, our nation's charities are struggling to help those suffering from COVID-19, and many deserving organizations can use all the help they can get, end quote, said IRS Commissioner Chuck Reddick. Quote, IRS reminds people there's a new provision that allows up to $300 in cash donations to qualifying organizations to be deductible from income. We encourage people to explore this option to help deserving tax-exempt organizations and the people and causes they serve, end quote. So the idea here is that the charitable deductions typically is an itemized deduction, which would be on the Schedule A, but the itemized deductions aren't taken by everyone if the standard deduction is greater than the itemized deductions. Therefore, to have the charitable deductions and the itemized deductions would only be beneficial to people for federal tax purposes, or at least prior to this, if they were itemizing and not simply taking the standard deduction, which is actually less people, because when they tried to simplify the code, they did so in such a way that more people would be taking basically the standard deduction. So therefore, they put this $300 in another area on the tax return, so those that are not itemizing, those that are taking the standard deduction, may still be eligible for the $300 deduction at that point. Back to the text. The Coronavirus Aid, Relief, and Economic Security, the CARES Act, enacted last spring, includes several temporary tax changes helping charities, including the special $300 deduction designed especially for people who choose to take the standard deduction rather than itemizing their deductions. Nearly 9 in 10 taxpayers now take the standard deduction and could potentially qualify for their new tax deduction. In tax year 2018, the most recent year for which complete figures are available, more than 134 million taxpayers claimed the standard deduction, just over 87% of all filers. And that was kind of the objective, to put people more kind of on the standard deduction when some of the major tax changes were made, because if the standard deduction is applied, that would simplify the tax code a lot. A lot of the complexity in the tax code will be when you add a lot more variation in the deductions. A lot of the variation, the deductions on the individual tax return are on the itemized deduction. So back to the text. Under this new change, individual taxpayers can claim an, quote, avoid above the line, end quote, deduction of up to $300 for cash donations made to charity during 2020. So when you think about the types of deductions on the tax returns, you've got the below the line or the itemized deductions, and what we could call above the line deductions, which might be basically Schedule 1 type deductions. Shortly, the terminology above the line means, they're above on the tax returns. They might be called deductions for income at this point in time. But in any case, those things are not going to be restricted by whether or not you're going to be using the standard deduction or not. And therefore, people who are taking the standard deduction should still get the, quote, above the line deduction of the $300 if so applicable. So this means the deduction lowers both adjusted gross income and taxable income. So it's going to lower adjusted gross income and taxable income, translating into tax savings for those making those donations to qualifying tax-exempt organizations. Before making a donation, the IRS reminds people they can check the special tax organization search tool. There's a link to that here on irs.gov to make sure the organization is eligible for tax deductible donations. Cash donations include those made by check, credit card, or debit card. They don't include securities, household items, or other property. The cash contributions to most charitable organizations qualify, some do not. Check Publication 526, Charitable Contributions, and the TEOS. There's a link to that here for more information. There's also a link to the Publication 526 here. Though cash contributions to most charitable organizations qualify, those made to supporting organizations and donor-advised funds do not. The IRS reminds everyone giving to charity to be sure to keep good records by law. Special record-keeping rules apply to any taxpayer claiming a charitable deduction. Usually this includes obtaining a receipt or acknowledgement letter from the charity before filing a return, and retaining a canceled check or credit card receipt. For details on these record-keeping rules, see Publication 526, available on irs.gov. There's a link to the Publication 526 here. In addition, the CARES Act includes other temporary provisions designed to help charities. These include higher charitable contribution limits for corporations, individuals, and itemize their deductions, and businesses that give food inventory to food banks and other eligible charities. For more information about these and other coronavirus-related tax relief provisions, visit irs.gov/coronavirus. There's a link to that here. There'll be a link to this in the description.